everyone, welcome back to our weekly market update video featuring by Market Soul and Rationale. Before starting, please take a quick moment and hit the subscribe button to support us for more content like this. It's hugely appreciated if you can do it to support us. In today's video, I'll talk briefly about the economic calendar, what has been, what kind of data came in last week especially, and what to expect this week, and their potential impact on market pricings. Then I'll be switching to chart section quickly to show you a few charts. So let's start quickly. First of all, here you see the economic data, and the major highlight of the last week was non-farm payroll data, a data set that helps ease recession fears. That was the main concept, especially due to this ongoing tariff uncertainty. The headline non-farm payroll number came in 177k above the expectation, which is actually good thing for the sake of the economic activity and for the health of the economy. But last 2 months number revised down by 58k. Also, while we're seeking to get some hints on rate cuts, as you might remember that last year we were following this data in vice versa perspective. In order to hike, we were the Fed was on a hiking path, so that's why we were seeking. Also, we were giving high importance to this reversion to 2 months previous month revision data, and that's why that's an important situation. It's important detail. The other thing is a 3-month average number of non-farm payroll data. It slightly improved to 155k. The government employment continues to decline, thanks to Department of Government Efficiency. Federal jobs down 9k in April and 26k since January. I think when you go back maybe 1 year ago, when I was talking about details of non-farm payroll data, the economy was really the non-farm payroll number was coming pretty well, because the government was supporting supporting hiring. That's why I believe there's still too much a room on this side. That's why this federal jobs down a 9k 26k. This doesn't hint any emergency situation in terms of unemployment. When you come to the wage inflation, you all know that we're looking this average hourly earnings data. Monthly data is much important to me. Both monthly and yearly average hourly earnings came in below market expectations. There's no sign that net immigration or deportation efforts, ongoing efforts, are impacted wages yet, because the expectation was, as we see more net immigration or deportation, the supply will come low in labor market, and that's why wages are going to increase. But we haven't seen such thing yet. Average hourly hours overtime hours remained unchanged. That's another sign that if there's more overtime, that you can see that demand is high and stuff. Unemployment rate ticked up from 4.18% to 4.20%. Household survey shows a strong gain of 4,306k jobs. Unemployment rate stayed balanced due to rise in a labor force participation. Yeah, for this time in a while, temporary health services, that's another important one, often seen as a leading indicator. Why? If there's if we see some increase in temporary health services, that means companies are are in rush to answer the demand, right? To match with the demand. So in order to that, they are seeking for temporary help. That's why we're tracking this environment. So the question is, will the Fed cut rates based on this data? I mean, simply you can say that, okay, since the economy is doing well, there's no need to do that. Yeah, a cut at this meeting would be a surprise with this mentality, but not entirely unreasonable, I think. The Fed likely wants to avoid making the same mistake as in 2021, when it was late to shift away from the transitory inflation narrative, right? I think like a May rate cut expectations are a bit overpriced. It's like last time I checked, it was like a 3% of rate cut. I mean, I'm also on the side that there will be no rate cut, and also I just read like I just saw a tweet from Nick Timaros, like he's like a Wall Street Journal journalist. He's really he's known like as like being really pretty close with the Fed. That's why I always like follow his articles, just especially before Fed, and he mentioned that it's like a highly like it's unlikely to see like some rate cut, but with the mindset of being late in like previous times, that would be for sure a surprise, but not that big surprise to me. Equity indices are currently more influenced by tariff related news, and market sentiment remains neutral to positive on that side. So Fed is still like acting like a normally, like, which is highly dependent on inflation and like unemployment rates or economic activity, but at the same time in like a current environment where like the Fed might be also another tool to be used by the government as a like kind of, like there's like as a tool in trade war, because it's not only in the current environment. Like, I mean, when we say that the major focus is on tariff, it's not like a merely tariffs, right? It's also the behind that there is like a huge political wars going on between like one side and US, and the other side like Iran, like Russia, China, and US is more. I mean, we see the reflection of this tension on especially oil price that I'll come in a minute. So yeah, based on all like recent data, this is like a current situation. Apart from that, we received some service numbers and service prices, as you can see here. I mean, there's nothing to alert. And tomorrow, I'm recording this video like 6th of May, Tuesday, tomorrow. On Wednesday, there's gonna be like a Fed meeting, and on Thursday, Bank of England meeting is going to be held. And based on all like this recent data, I'm focusing on when it's just like forex market is the case. I'm focusing on forex opportunities aligned with rate paths and macro trends. I'm looking for short setups in Australian dollar, New Zealand dollar, and British pound, because all are in like a rate cut cycles. Plus Canadian dollar, why? It's pressured by oil weakness. On the other hand, I'm looking for long setups in Swiss franc, which is supported by gold and precious metals, and where the rate cut cycle is likely like kind of done. And on euro, like apart from Swiss franc, euro, which has a June ECB meeting ahead and may stay like a sideways to slightly bullish versus USD. Like it's, I mean, technically I'll also show you that I kind of expect some like the Euro USD to be traded in some within the range. So I don't expect like a huge move from that. That's why, I mean, yeah, I'm more bullish on euro, not like neutral to bullish, let's say. And lastly, Japanese yen, which is supported by rate hike potential, and which is known as, it's like a risk of characteristic. So I think emerging markets will need to maintain their rates amid like a global uncertainty arising from the tariffs. So it makes difficult kind of to short them. That's why I'm kind of skipping that side. But I had mentioned before that being long in USD against Southeastern Rand ZAR is like technically seems good to me. Like not yet, but I'm waiting it to develop. But yeah, it's the general environment right now. So let me switch quickly to chart section. Yeah, and let's start with like gold. You might recall that in the 4-hour chart, so I had mentioned this like a flag tightening, and boom, then we had talked about we had talked about this kind of head and shoulder top chart pattern, which might act as both like a bearish reversal. It attempt to that, but then it might also, you know, this like the characteristic of head and shoulder tops are, it's like it might go like a both directions, right? and we saw that like last 2 days, huge move coming from here, especially after we started this week, huge move in emerging markets currencies like Taiwan and won, because of like this, again, like a tariff related uncertainties. So here for sure the prior high of, let's say 3,500 seems to be like a resistance, but we'll see if it acts as a double top or something. But as I mentioned in all videos, as you can see in the daily chart, this blue line 50-day moving average, this black one is 21-day, and the other one is like a 10-day moving average. As you can see, always this, I mean, this combination, I mentioned those as like short-term moving averages. As you can see, like within the trend, always this short-term moving averages acting as support, and it acted as in the same way here as well. But I think like this gold appreciation is much more related, so it's more related with something big. There are a lot of articles are written, had written about it, but like when you look at the chart solely, you can see that like, I mean, there's no way to be like against this kind of trend. I think that will be very risky, at least for now. So let me skip to oil prices before getting technical side. Again, I'll mention this huge descending triangle chart pattern, but I want to talk about a bit again to remind you what's the behind of all this going on, oil short activity, especially when you look at the reports and stuff. So about oil prices, first of all, US influence on especially Saudi Arabia, accordingly OPEC Plus, to keep oil prices in check. It's pretty important. It's really important here because they want to avoid some price jumps if tension rise between US and Israel ally against like a Russia or China, because also Iran. If we see some like because like US is not that happy with the latest developments, what's going on in between Russia and Ukraine, and it's not that like it's already known that they just want to solve the Ukrainian Russia issue plus like a Middle East issue in order to focus more on China side. That's what this government is aiming as far as that's just a commentary, but yeah, that's what is seen right now. And in order to solve that, all these kind of tensions, especially in Middle East, will lead oil price to spike. And why like oil prices matter for especially US government? High gas prices, high oil prices can first hurt the economy and cause inflation, if this inflation combines with the economic activity slowdown, which is like supported by tariffs, that would lead to stagflation, right? And that's a huge risk for like a new government. They could also weaken the political supports for the current government. So politically plus stagflation side put pressure on the US to take oil under control. So US that's why they're taking steps now to protect the oil price to jump against like a future price spikes, because you never know. It's uncertainty has been all around since the beginning of 2025. That's why any kind of a news flow would be impactful on oil prices for sure. That's why they aim to keep things stable no matter what happens globally. In the oil side, because gas prices will also if they go to election after high gas prices, the history show that is always negative for that administration. So accordingly, with all this in mind, my oil market plan is I'm only betting on oil prices going down. That's why. That's my. I don't want to be long on it. Definitely, it's my a long only thing. And when we come to the a technical side, I will just again show you this descending triangle, breakdown, pullback, and the continuation of that. The break that price move resumed. Then in the weekly, this week we saw some rejection from this support level. When you come to the daily, I think any kind of convergence here with a stop around here, something like this, is still like a good opportunity. And the price target of this descending triangle chart pattern is around like a $45 level. And euro dollar, when you come to the daily, as you can see here, is after this head and shoulder bottom chart pattern breakout, we see here like a flag, or like, I don't know, like a you can call it head and shoulder top also. Again, what we can see, what we see in the gold, but this is the range here, like this is the range here for now. And I'm watching if we see any breakout attempt from this level for sure, and also I'm watching a breakdown attempt below 1.12 levels. Aussie franc here, as I mentioned before, like I'm for me only like I can be short in this one. And when you go to the sorry, yeah, here is like a pretty important, like there was a huge breakdown here, as you might recall, and the price pulled back around here. So it's like in the weekly chart, but all this region is, I think it's like a sell region, which you can call it sell region, and having a stop just above this level. And euro Aussie, when you go to the daily chart, you can see that there's a like a here's like a cup with handle-ish chart pattern. Oh, sorry. Here, then huge breakout and pulling back, as you can see here around this region is like seems like a buy region for me, and I can be long here in euro against Aussie dollar with, if you want to play like a white stop, that could be like it's 2.7%. But if you want to be like more tight, you can just get this high, today's high here as a support, which is around like a 174. You can have stop around like a 73.80 or 73.80 or something. That might be a good option. Remember, all my mentality is being long in euro, franc, Japanese yen, seeking to be long in euro, Japanese yen, Swiss franc, gold, and be like seeking trade opportunities to be short in Aussie, New Zealand dollar, Canadian dollar. Yeah, so let me skip to pound franc. As you can see here, after this huge move, it pulled back here, and this area of 1.11 level acted as, I mean, I had mentioned this before here, this trade idea was given in the previous video. Yep, and just as a reminder that if you're not able to follow all the videos like subsequently, yeah, like you can also, you can, I mean, if you subscribe to Rationale newsletter service, you also get all these trade ideas directly to your inbox. Okay, so if you on like a Wednesday, you can watch this video. In order to follow up, you can subscribe to you can open the notification for Market Soul YouTube channel. Also, I mean, all these links are just below the video. Also, you can just like subscribe to Rationale newsletter service in order to receive all these trade ideas to your inbox. And there's also a watch list which is tracking all these trade ideas for you. When you just like feel lost, just go there and you can see the current situation of that trade idea, if it's like a broken out, if it's still like ongoing trade idea, if it acted and it's not going well and stuff. You can just follow all the details from there. You can find all links just below the video. So let me quickly switch to New Zealand dollar franc. As you can see, descending triangle chart pattern. This one is another trade idea that I mentioned in the previous video. Pulled back, and I had given this like I think short idea around here, and currently it's coming back. But I mean, I think it's another opportunity to be short for now. And Aussie, Japanese yen. Let me show you this. There's no like immediate action on this one for me. and I'll be waiting to see if we see any rejection from like this area. So this area seems for me like you can build your short put, seems to be, let me go with like this. This area is like a short sell region for me, especially, and it might form a head and shoulder top if it happens like this. If we see some move like this, then yeah, but there is no like necessarily one single sell level, right? You can start selling from here, then if it goes up, then here, then you have an average sell cost. But if you have like a something if you have something averaged here with a stop around here, for example, taking this high as a this level as a previous stop level, and you might have an early entry for potential head and shoulder top chart pattern formation. And I think I was going to show you also same here, Canadian dollar, Japanese yen in the weekly chart. I think sell zone, this area seems to be still sell zone due to this head and shoulder top. I know that it's swinging a lot here. I mean, it got, but as you can see, like I mean, we see like lower highs also. That means that like buyers are getting exhausted after a point. But yeah, and you know, this sell zone also like worked again like 2 days ago. Yeah, and that's all I'm gonna talk about this week. Like thanks for your time, and again, just if you hit like button and if you subscribe to Market Soul YouTube channel by after like open your notifications, that means a lot for us. You know, if you just want to support us, we will be glad. I wish you a really nice week. Have a wonderful day. Bye.